a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about China ETFs. Now, risk assets in general had a remarkable rally last week after the CPI data, which suggested that the Fed may not be too aggressive now in their tightening campaign. And for China's stocks, there were two more reasons which sent these stocks surging. Now, these stocks have been beaten down over the past 2 years or so. And there are two main sore points for the Chinese economy and Chinese stocks. There's continued zero COVID policy, pandemic-related restrictions, and then the turmoil in the housing sector. So last week, China announced some relaxations to their zero COVID policy. And then on Friday and Monday, they also announced some very significant measures to support their struggling housing sector. So these stocks, particularly housing stocks, have had a remarkable turnaround over the past 2-3 days. So we'll take a look at these China ETFs. Now, investors should remember that China is the second largest economy in the world. So obviously, there's always a lot of interest in Chinese stocks. They look cheap after having been beaten down, been pummeled. So a lot of traders have been pouring money into these stocks and ETFs, but they remain risky because they haven't yet abandoned their zero COVID policy, and the property sector remains in turmoil. So it remains to be seen whether these measures will be able to help the economy. And investors should also remember that if they own a broader emerging market ETF, then they probably have a lot of exposure to China already. About EM, ETFs like EM have more than 30% exposure to China, but there are always risks of investing in these countries which have authoritarian regimes. But if you have slightly higher risk tolerance, maybe take a look at these ETFs. So the first one we are taking a look at is the most popular China ETF. It is the iShares MSCI China ETF, ticker MCHI. So this provides broad market cap weighted exposure to Chinese equities which are available to international investors. And this includes all H shares, B shares, red chips, P chips. Chinese stock market is complicated. So if you want to learn more, maybe go to those the provider pages and learn more about various categories. This has 622 holdings, but top heavy. Has more than 6 billion in assets and charges an expense ratio of 57 basis points. If you want to learn more about the ETF, you can go to the code page on Zacks.com, and from there you can use the link. You can read our research report articles, and then using the link you can go to the iShares web page for this ETF. So basically large and mid-sized companies in China which are available to international investors. So looking at the top holdings, you will see Tencent Holdings, Alibaba, Meituan, China Construction Bank, JD.com, all these familiar companies, they are the top holdings in the ETF. And though it has more than 600 holdings, it is top heavy with about 40% allocation to these top holdings. In terms of sectors, it is pretty diversified, with consumer discretionary accounting for almost 30% of the portfolio. And these are the sectors, the stocks that will benefit from the growing middle class in China and their rising income. So that is one of the main reasons why people look at Chinese equities. The second one that I'm highlighting is by CHIR. It is very popular with day traders and in fact got a lot of popularity on Reddit boards in 2021. It is KWEB China ETF. It holds Chinese internet companies and which are listed either in Hong Kong or here in the US. Now, in terms of holdings, it has a much more concentrated portfolio, 43 holdings, and again, top holdings. It is even more top heavy with about 64% weight in the top holdings. This has about 5 billion in assets currently and charges 69 basis points expense ratio. In 2021, it had gathered almost 7 billion in assets as it was very popular with day traders despite its atrocious performance, but it continued gathering assets. So again, you can go to the quote page. CHIR has some good research on investing in China. You can read that and look at the top holdings. So since there were concerns about delisting of Chinese tech giants from the US because they were not complying with some of our audit regulations, so the CTF has been shifting its holdings from being US listed to mainly Hong Kong listed. So Tencent, Alibaba, Meituan are the top holdings in this ETF, and you can read how they have been shifting their holdings from US listed to Hong Kong listed. Now, the third one I'm highlighting is mainly because I wanted to show the dramatic turnaround in real estate equities in China. It is by Global X and the ticker symbol is CHIR. It holds Chinese real estate companies, including IShares, has only 30 holdings, pretty small. As of now, just about 5 million in assets. So if you want to bet on the ETF, you have to be very careful and use a limit order for sure. 66 basis points expense ratio. And again, you'd want to learn more, you can go to the quote page and go to the Global X web page for this ETF, and you can read the research. And these are not the companies that people are usually familiar with because we are more familiar with Chinese tech giants. China Resources, China Overseas, KE Holdings, these are the top holdings in this ETF. On the next slide, I have the comparative performance versus the S&P 500 index. So these China ETFs are down between 35% and 40% year to date, whereas the S&P 500 index is down about 15% after last week's surge. On the next slide, I have shown the comparative performance in November, and you will see that the real estate ETF has surged about 40% in November. Other China ETFs that we highlighted that are up between 15 and 25% in November, whereas the S&P 500 index is up about 4%. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. And also make sure to subscribe to all our videos so that you do not miss anything. And I'll see you next week.